Good morning, folks. How are we doing? And welcome to another one of my videos. So today I have 4 pairs on watch, and those are Kiwi CAD, Euro Dollar, CAD Yen, and Pound Aussie. I may take one of these off in a minute, but we'll talk about that when I get down to that pair. But anyway, on the higher time frames, Kiwi CAD I would say is my favorite from a directional perspective and I'm looking to get long on this pair today, and that is specifically because we have this low here. Okay, we gap to the low there. We move up correctively all in all, and then we come back down as we usually do when we gap to a significant area. We break below, especially on the higher time frames, wash out all of the liquidity that was there, and then we've pushed up to the upside with aggression, and now we seem to have this impulse correction potential continuation to the upside, which if we were to measure it, if we were to be moving a lot higher, and we assume that the continuation leg out would be of a similar length, that would take us up into this region where all these more significant highs, and in particular this one, are situated. The other thing that makes me think that a move to the upside would be a good idea, not just the fact that we've washed out all of the liquidity here, but also we have a gap here to this high, okay? So we have a near miss to this high, which is giving me the indication that if we push down on the lower time frames into an area of significance, then we would likely be able to capitalize on a move to the upside. I like the fact as well, just touching on this on the fly, is that this sharp move here, we've pushed through that multiple times and not reacted. So we've not, if this was an area of liquidity for a short, for example, then we wouldn't keep, every time, if you think about it logically, every time we tap into that, we're taking out more and more liquidity. So if we're taking out more and more liquidity and price doesn't move to the downside, then it's likely because there wasn't enough liquidity here to send it to the downside, and this is just accumulation for the next wave to the upside, okay? So let's get all my doodlings off the chart for a second. There's one more. There we go. So if we zoom in, so that's the story on the higher time frames. And if you look at, even if you look on the monthly, what this is looking like at the minute, okay, and bearing in mind, I'm literally just thinking about this on the fly. This is the last day of April. So if this monthly candle was to close like this by the end of today, what do you think the bigger players are going to be thinking? You know, it's washed out all of that. It's filled the gap. We can even see this on the monthly chart. So if this candle closes like that by the end of the day, then that's a very good indication that we're moving to the upside. You can see the correction here on the daily. Okay, we're moving down. What are we moving down into? Well, it looks to me like we've not responded to anything on the left for shorts. As I said, we've tapped into this multiple times and price didn't find anything. What we appear to be doing is gravitating back towards the base of all of this consolidation. And I also like the fact that we're doing it in the form of a 1, 2, 3. Okay, if a 1, 2, 3 is often the completion of a move, and the move completes at the base of a consolidation, then that's a good indication that we may be moving to the upside from there. And if we just measure that, that lines up mathematically with that low as well. And if I just drill down to the 1 hour chart, so previously I actually had this marked as my area of value because there was a sharp move there, okay, and we could have reacted from there. However, what makes me think that it's more likely to tap into this, which in reality, although it's not quite a standout, is technically the base of all of this consolidation. What makes me think that is that if I just put my ray line on where I had it, okay, like that, if this was going to be the base of the whole larger correction, we don't normally build volume just above it, okay? That's not normally what happens, okay? We would normally get a very small consolidation or just get to that area like that. So what that's showing me, if its price is building volume, then that is likely the low, okay, the base of all of this, because this move here, okay, that move there, this impulse correction continuation would likely fill its target, which actually mathematically lines up with there anyway. Okay, so with all of that in mind, I hope that makes sense. Maybe it doesn't if you're a bit newer, but anyway, speeding up because I've got a few pairs to get through and taking that off the chart. What I'll be looking for is a tap into the area of value as I've got it marked there, a push up and then a flag. I'm not looking for any risk entries from from within there, because you do have to remember as well that we have actually kind of broke out of some volume there. So, and we've moved down, broke out of that and moved down. So I don't want to be taking any risk entries. I want the market to actually show its hand, because the structure is a little bit atypical and it's very, very large now. So I'm not going to be looking for just even a 4-hour candle there. I don't think that would be enough weight to confirm that this is actually ready to move to the upside. So I'm looking for a push up, a flag, and then I would look to get long. Okay, and then I'll be targeting there as a first inflection point, and then targeting here because this high is the near miss to there. Okay, so that's what I'll be targeting, and we'd have about 9.5, 10% to work with. So that is Kiwi CAD. Let's move on. Move on to the next pair. Euro dollar. Euro dollar is already literally in the last few minutes doing what I was anticipating. So on the higher time frames, we can see that we have the big impulse up. Yes, we have this big impulse up, but we have potentially completed this structure. Okay, I'm just doing this crudely. And we've tapped into an area of significance. Okay, so we had the volume there, and we had a big sell-off from the area of volume, giving me a clue there's likely a lot of liquidity there, especially when it lines up with a structure like that. Okay, and you can see that since then we've had the weekly close. It broke above, as we usually do on the higher time frames, broke above, washed out the liquidity, and then we had that kind of early, if you like, a morning star formation forming there. So big washout candle on the weekly, that's good. And now you can see on the daily, we have that impulse correction continuation starting to form. We have the gaps to the lows, which will likely be taken out, as they usually are. 4-hour chart, you can see where did the volume originate from. So we pushed down, price pushed down. There was a sharp pullback here, and it left a footprint. Okay, and then we get the mechanical structures that we look for. We have a first touch, we have a second touch that leaves a gap to where the volume originated from. We move down correctively, likely because people are trying to sell this whilst the volume that's up there is dragging price up. And then what we typically see is price pop out of all of this volume to complete the 1, 2, 3. Okay, now one thing I'm not going to be doing is I'm personally not going to be looking for a risk entry from the edge of structure here, simply because of how wide or voluminous, I do like squeezing that word into my videos at every given opportunity. Okay, so because of how wide this has got relative to this move down which has preceded it, and because we do have to remember, if we just zoom out slightly, we do have to remember that there is, if I remember rightly, there is another high sat not a million miles above. Okay, so because of that, and because what am I talking about here? If you're new to my videos, what I'm talking about is when a move gets very wide relative to the move down which has preceded it, it can pop up to the upside to give us what we call an M-style pattern. So we have this, we have the accumulation of volume, and if it gets very wide, you can end up being tagged in, tagged out, and price pushes up to here to test these highs, or potentially to tap into that high that I was talking about just above. So there's reasons for price to move higher. So what I'm doing, rather than trying to call the top, is I'm going to wait for a tap into the area followed by a push down and a flag, and then I would look to get short on the break of the flag, and then I would target this low. Okay, I would be targeting this low here, which narrowly missed that low there, just in case this is something like that, which then becomes a bit of a middle section to push higher to tap into that high sat just above. And the other thing I'm factoring in while I think about this on the fly is the volume here. So this middle section here, okay, if this is the middle section, okay, typically speaking, price will break out by a similar amount, right? But sometimes it will times 2 the amount that it breaks out, okay? So if it times 2 the amount it broke out, that would actually leave us up to this area, okay? So, and if we just measure this on the fly, let's just measure this. If we measure that, that would line up there. But again, because of the amount of volume built up here, if we measure it from the break, that would also take us up to the area. So I'm factoring in how much volume this middle section is generating as well. So calling the top here when you've got this much volume within a middle section also becomes more risky. And if this was to shape up, I can envisage that because of this, we would likely break a bit higher. But just for insurance purposes, I'm waiting for an insurance entry, push down on the flag from the area, and we'll see what happens. Okay, so that is euro dollar. Let's get those off the chart a minute. Get the squiggles off the chart. So, okay, so this is doing what I thought as well. So on the daily chart, you can see, so we've technically bottomed out of this area. So this is partly why this is lower down on the list. Okay. But what's happened here? So we keep tapping these lows. We have the gap there. So we have the low, the gap, we tap into it, we move up, but price doesn't seem to have found enough liquidity to push it to the upside from there. Okay. And once again, as I said, you've got a significant low there. But if we keep tapping into this multiple times, we're exhausting the liquidity that was likely down there. Okay. You can see here that we've tapped into this high and we've pushed down with aggression by way of this daily candle here. You do have to zoom in slightly more to see the structures on this, which is partly why it's lower down on the list. But nevertheless, we have tapped into the origin of all of this. So we can separate the structures here. We have a completed structure here. We break above, wash out all the liquidity, move to the downside, leave a footprint. That was the origin of all of this. We tap into it. I don't like the fact that we just kind of wick to it rather than breaking above. But nevertheless, we have actually tapped into it. You've got to remember that, sometimes if it's the case as well that, many people are at break even, it doesn't always break above. And you have to remember that high is not significant on the higher time frames. So it is less likely to break above. But nevertheless, we have, and I also don't like the fact that we've moved down correctively before dropping out. But nevertheless, what we do have, we can't deny it, is we've tapped into that area, we've moved down, we have a sideways correction, and we appear to be retesting the back end of this volume here, okay? Now, because this, another thing I don't like about this is we don't have a middle section within here. So one thing that's not typical is the middle section of a structure is not typically more impulsive than the move into it and the move out of it, okay? That is a bit atypical. But what is good is that we do kind of have a 1, 2, 3 last leg. So because of the lack of middle section here and the fact that, we didn't break the high, I wouldn't be surprised if this just pops out higher, okay? And I would consider some kind of 1 hour correction like that sideways to get long if we consolidated just above here and above here as well. But that likely wouldn't be ready by the end of the day. So that would be a kind of tomorrow forecast, as we say. But for the shorts, if we just look at this, I can actually see the structure on the 4 hour chart. I can see the lows and I can see the highs. So therefore that makes this a 4 hour structure. And for my rules where a 4 hour structure is concerned are as follows. Okay, so if we get a 4 hour structure, which this now is in my opinion and experience, what I'm looking for is a 4 hour corrective tap into the area of value, which we've got. And then I'm looking for either a 4 hour risk entry, so a 4 hour rejection, a high test, or a retrace candle, or I'm looking for 2 1 hour rejections. You can see at the moment we haven't got either of those. So what I've done is I've set a Google Calendar reminder to remind me to check this pair at about 1/4 every hour, just to see if we've got a 1 hour rejection yet. Okay. And that gives me like 15 minutes to sit down, get the broker set up, calculate the position, etc., without rushing. If you give yourself sort of 5 minutes, then you've probably not got enough time to do it and you might feel a bit rushed. So I like to give myself 15 minutes to sit down, get everything opened up, calculate the position size, make sure I've done it properly, haven't made any mistakes. Anyway, that is CAD Gen. And then I would target this low here. I don't think I can get, I can't get 5% to that low. So the take, when I set a take profit, my minimum is 5%. So if I can't get a take profit at a near miss, if I can't get a 5% at a near miss to a low, what I actually do is set it at the low. And the reason I would set it here is because this was the base of all of this. So that was the base. And also because we've kind of gone from a correction into a slightly larger correction, what this could be, what this could be is some kind of middle section to push back up from there. So this whole thing becomes a middle section to push back up because we didn't break that high, okay? And then we end up with this 1, 2, 3 structure, and this whole thing was actually just a middle section. So that's the thinking behind CAD yen, and we'll see if we get those rejection candles. If we do, great. If we don't, I don't care. I'm going to move on. So pound Aussie. Okay, pound Aussie. I thought it was going to pop higher. It hasn't. So on the higher time frames, we have this structure. We have this 1, 2, 3, and you can see that we have pushed down with aggression. In hindsight, and looking at the high time frames, I actually prefer this a bit more than CAD yen, but because we have that structure, and then we have the aggressive weekly, and you can see even on the weekly, I like the fact that I can see all of this on the weekly, which in retrospect makes this slightly better for a number of reasons, I think, than CAD yen. So I might change the order of that. But we have the bearish weekly, and we have the correction afterwards. I like the fact that we can see the impulse and the correction even on the weekly chart. For the potential move to the downside. I was looking for, I don't like the gap, to the next high, significant high. However, it's so far away now, and we've got a very deliberate consolidation. What I was looking for, so we've got the impulse correction there. You can see the 1, 2, 3. I was previously looking for a tap into that area. Why? Because, as I said previously, this has become very wide relative to the impulse down which had preceded it, which was giving me the indication that this could be an M-style pattern which taps into that, and then we move from there. However, which is actually why I wouldn't have taken a risk entry from the edge of structure here, because you could be tagged in, tagged out, price does that, and then moves to the downside from there. So what I was looking for is an insurance entry, which may be starting to form at the minute. Okay, so we have the 1, 2, 3 here. Rather than try and call the top, because of the volume sat above, I'm waiting for an impulse down followed by a correction sideways. And if we just drop down to the 1 hour, you can see that that might be starting to form now. Okay, so we had a little consolidation there. Okay, so there wasn't really a way to get in on that, I don't believe. No, there's no way to get in on that. So what I'm looking for here is I'm looking for a 1 hour consolidation sideways. So this is one, just looking how that's popped up like that. This might not be ready by the end of the day, but we shall see. I'm looking for a 1 hour consolidation. Of course, it's a bit larger than when I drew it a moment ago. If we get some kind of one hour consolidation like that, then I would be satisfied. We would likely by that point have a slight head and shoulders pattern as well. It's not paramount, but we would have something like that if this was to be the high of the structure, which would be quite nice, an added confluence factor. And then I would look to get short within the structure. Okay, and I'll be able to manage it down to these lows here for something in the region of 3%, and I would target this sharp move for something in the region of 9.5%, because if we measure the whole range, that is actually the 90% area which is where price can pull back deeply, even if it's going to continue in the forecasted direction. Okay, so that is what I'm looking for today. If this just does what it might be about to do, if this just does that and starts pushing up like that, then I shall take this off of watch, and then I won't be looking for anything from this pair anymore. But anyway, folks, I hope you've enjoyed this video. It's just what I'm doing here is I'm just setting the alert on the fly just to see if price pushes down. The reason I've set it below price is I'm looking for price to push down to give us a base, and then if we get that, I'll set another alert up here to see if we tap the high of the structure. And as I said, if the whole thing gets invalidated, I don't care. I'll just take it off of watch. Anyway, folks, that is my forecast today. That's what I'm looking for, not what I'm necessarily expecting or anticipating, is what I'm looking for. And if what I'm looking for doesn't shape up, then I won't be placing a trade on any of these pairs. Thanks for watching, folks. I'll see you in the next video. Have a great rest of your day.